How's it going, fellow traders? This is Magic Trader here, and this is the CFTC report that was released. The data was released October 24th, and here's a snapshot of all the data for all the major currency pairs in the US dollar. Alright, so let's get down into analyzing what the data shows us. Okay, so for gold, what do we see for gold? Alright, well, last week we saw an increase in gold from 279 to 284,000. This week we see, or this past week, we see a drop from 284 to 275. And this came as price was dropping down right into the reaction of the weekly bullish engulf, where I believe, 5,000 positions were taken long down at this area. So an original 30,000 positions were taking long. Price rallied, price came back in, they filled another 5,000 and they dropped back again into that area. So when price is declining, longs decreasing, it makes sense. They're closing longs, meaning they need sells to come in, which causes prices to drop. And they increase shorts by about 1,000, which also causes the drop in price. So I'm not concerned about this decrease in longs, because if you take a look here, we're still holding very strong. Okay, net positions is a positive 191,000, and long exposure remains at 77%. Okay, so long exposure remains at 77%. We're sitting at a non-2-to-1 monthly demand zone that was responsible for breaking a 3-month trend line that goes back forever, and we're getting a really nice reaction off that area. So I'm looking for long setups. Okay, I'm looking for really good long setups to be created off of this area, and then I'm looking to get in long on gold. As for oil, what do we see here with oil? So with oil, we see an increase in oil, right, from 701,000 to 710,000 long, and that causes price to rally right straight deep into this weekly tested supply zone. We've since seen that this weekly supply zone has broken, but we do have another weekly supply zone right above price, right here, nested within this area here. So that's going to cause a nice reaction when we get up there. I'm expecting price to drop back down. Excuse me, but here's the deal. I'm expecting price to come up here, drop back down, and come down to about this area where we used to be at, consolidating. Okay. Once price gets down here, I'll be looking for long setups to be created for me to take longs here, because once this gets tested, I'm expecting a second test, drop, and then eventually a breakthrough to the upside. And once that breakthrough happens, we have a large area to move up to. So long exposure holding very strong. In fact, it increased 1 point from 72% to 73% of their overall exposure geared to the long side. And net positions increased one more time from 429,000 to a positive 446,000 on oil. So everything's looking really good for taking trades long on oil. Just waiting for this reaction off this weekly zone, and then a pullback, and then I'm going to get in. So patience is key with oil. US dollar. So we see an increase in longs from 28,000 to 32,000. And we also see an increase in shorts from 33,000 to 36,000. So that happens as this candle is formed. So a very bullish candle, moving price to the upside. So it makes sense that they're increasing their longs because they're moving price upwards. But at the same time, they're increasing shorts. Makes sense? To me it does. Why? Because they're hedging, right? They're adding long because they want to get price to move up. But they're also adding shorts because they know that eventually they're going to take price back down. Alright, we got a monthly 20 EMA right here. We got a trend line coming here. We got a nice weekly supply zone right over here. So price comes up, tests. I'm waiting for momentum to shift, and then short setups to take advantage of the move down. So net position slowly increasing over the last few weeks, and long exposure sitting at 47%, which is around their average. Short exposure at 53%. So they're not very well positioned in terms of long and short positions. So so we'd like to see short exposure become a lot larger. Instead of 53%, we'd like to see it in the 60s, maybe even 70s. But right now it's only 53. So, but if you look at the coloration of the cells, the colorations of the cell are red. So we are seeing a very strong bearish bias. All right. Like I said, I'm waiting for momentum to shift here at this weekly supply, and then a move to the downside is what I'm expecting. Aussie. So Aussie looks good. Longs are holding aggressiveness right here. They didn't increase, still at 85,000. But shorts increased by about 5,000. And this happened as we got this bearish candle. So why did shorts increase? Well, to get price to drop into this weekly area of demand. Longs are holding because I bet you they'd rather get longs here than on the way down. That's all. So we got the trendline confluence here. We got weekly demand here that removed some good areas previously. We got long exposure holding very strong, 75%. Coloration of the cells very green. Yes, net positions dropped from 61,000 positive to a positive 57,000, but that means nothing. We'd expect that to happen as price is declining. But now I'm going to be looking for momentum to shift to the upside, and I'm looking for signs of longs being accumulated, and then I'm going to look for trades to the long side. I do have already an order to go long down here, missed it by pips. But I'm going to be holding steady until I either that trade gets triggered or new setups get formed on the daily chart. So taking a look at the U.S. CAD, we see an increase in longs from 19,000 to 24,000. And we see a slight increase in shorts from 94,000 to 96. So just like we saw in the US dollar, they increased longs to get price to jump up to that weekly supply, and they were also increasing shorts as a hedge on those longs in preparation for a move to the downside. So we have this area that is a potential weekly supply. It's potential because the formation of this candle isn't exactly what we would want to see, but still it removed areas and it caused some important things on the charts. So it's to be respected. So I drew it in, but I did color it yellow just as an indication that it's not the typical formation of a supply area, but it still is something to recognize. We also got the sloping monthly 20 EMA there. Price could rally all the way up here before dropping. It is a possibility, or it can just stall out here and then start heading downwards. So I'm looking for momentum to shift, and then I'm looking for short setups to take on the way down. The bias is clearly short, so there's nothing else to look here. If this area of weekly supply doesn't break and some good strong setups short form at this area, I'll be looking to take shorts for sure. US Swiss, as I mentioned last week on Twitter, we have a monthly supply zone coming into contact, so I said we should start seeing some weakness coming into the charts on the US crosspairs, which is exactly what happened. So on this chart, I'm not really looking to take any trades. If something really nice sets up on the daily chart to short, I'll take a trade, otherwise I won't. And if I do take a short, I'll be aiming for this weekly area of demand down here. So longs increase as price heads up, shorts aggressive, and but net positions are a positive 11,000. So nothing clear for me to take shorts just yet. I want to see momentum shift before I start looking for short positions. Euro USD, this one's a good chart. Let's take a look here. So long exposure drops by about 3K, shorts increase by about 4K. Net effect is long exposure drops only 1 point, but holds very aggressive long bias, and net positions drop from 92 to 83,000, which is no big deal. Weekly supply is in control. It has further to drop to that weekly area of demand. So it'll be interesting to see what happens. It could just reverse now simply because gold is reversing, US dollar is reversing, all the other pairs are reversing in their respective zones. This one's falling short of hitting its zone. So a couple things can happen. We can see a drop in the euro, or we can see it reversing from in the middle of nowhere. So taking longs on the euro US dollar is not the greatest odds right now, simply because it's not reacting to a high quality zone. So for me to get excited about this, I'd really have to see momentum shift on the daily chart and see some really good long setups form on the daily chart before I'd ever consider taking longs on here, or momentum to shift down here, and then I'll take long setups all the way up. Pound US dollar, what do we see with the pound? We see that longs decrease from 72,000 to 66,000. We see shorts are holding at 67,000. Long exposure still, long exposure drops 3 points from 52% to 49%, but coloration of the cells are still green. Net positions drop from a positive 5,000 to a negative 1.4 thousand. That comes as we consolidated right over here. So no specific drop in price. They closed longs and they left shorts alone as they consolidated sideways. So price could drop right here, or it could be that they were just reducing exposure because we have the Bank of England coming out with a rate release. Let me see when that's happening. That's happening on Thursday. Bank of England coming out with the rate release. So it could be that they were just reducing exposure in preparation for the rate release. My guess is, regardless of what happens with the rate release, we're going to see a move to the upside on the pound. Okay, we could get a drop down into weekly demand and then the move up. That's a definite must. Not definite must, but that's a definite possibility. But the way that it's holding on to this weekly 20 EMA, my bet is that we're just going to see a move to the upside. Okay. US dollar, Japanese yen. So we're testing this area, this descending weekly trend line. We got a tested weekly supply in control. I believe we're going to see a move to the downside. Long exposure jumped up 1% to 75%. This happened as we got this very bullish candle here. So an increase in longs was expected, but look, 2 weeks in a row of increased shorts. So in my rule book, 2 weeks in a row of increased shorts becoming aggressive means they're hedging. So they're hedging on longs for shorts. Why? Because a move to the downside. It's perfectly timed with what gold is doing. It's perfectly timed with what the US dollar is doing. Okay, US dollar is dropping, US CAD dropping. Makes sense that this one drops. US Swiss franc hitting monthly supply. It's going to drop. Euro's the only one that's falling short of hitting demand. Same with the pound. And then we'll look at the other one. The Kiwi looks to even want to drop further. So so it looks like that's what's going to happen on this chart. Okay, so here is the Kiwi. I've been telling you that this is a very questionable monthly demand. So now it's on the verge of breaking. We have room for it to completely drop down here, which is why I have the long exposure right now on Aussie New Zealand, because Aussie strength is building. We're hitting a weekly demand zone that looks great. Monthly trend line is upwards. The force of price is upwards, and it's going to be gaining strength. When we take a look here, longs haven't done anything. Shorts have increased by about 5K. Long exposure 51%. Overall coloration of the cells blue, so very neutral. Net positions positive 611, which is nothing. So I'm expecting a bigger drop on the Kiwi. Out of all the major pairs that are not with the US dollar before it, they are getting very strong. This one's getting weak. Okay, Euro's getting strong, pound's getting strong. This one's just getting really, really weak and broken down. Aussie's getting strong. So what do we got? We got Bank of Japan releasing interest rates today. Okay, Bank of Japan releasing interest rates today. So we could expect the force of price to be downwards. Okay, that's what I'm expecting, for price to move downwards. On Wednesday, U.S. The Fed interest rates coming out, so I believe we're going to see the Dixie drop. Dixie drop, or Dixie's going to head up higher into that weekly supply. That's very possible, you know. I've seen this happen before in the past, where the rate release comes out and price just rallies, breaks up to the upside. Retail traders think, oh wow, okay, so institutions want to go long the dollar, but they just use the news and they use the momentum to bring price right up into a weekly area of supply, and once it gets there, boom, everybody's longs get cut out, stopped out, and institutions fill in their supply. From here, they fill in their supply orders, their sell orders, and then price drops. So that's very possible, and that would be nicely timed with the euro too, right? U.S. dollar climbs a little bit more into weekly supply, drops. Euro drops a little bit more into weekly demand, and then rises. And then we have Bank of England on Thursday releasing rates. And you know, it's pretty much the same thing with these charts. So with the Bank of England, we could see a drop in the pound. Very likely we see a drop in the pound and then up. If that doesn't happen, it's going to be straight up. So either way, pound's going up. There's no doubt in my mind that that's what's going to happen. Okay? Alright, so that is your CFTC report for this week. I hope you guys trade well out there. Hope you guys enjoyed the data and the report for this week. And until next week, take care of yourself.